I just want to get perspective from you of how you manage businesses when we just have no clarity right now.
Well, I think right now there's two big issues, and both center on liquidity. One is managing expenses as best as you possibly can during this situation. We've put a number of initiatives together around discretionary spending, payroll, and salary reductions where our executive teams have cut back on salary. The other area is the balance sheet, particularly inventory. And that's really tricky at this point in time because you have to anticipate when the stores are going to reopen, how much time you're going to have left in the spring-summer season to sell fashion apparel as we go through the next few months, depending when we reopen, both here in North America and in Europe, which represents about 80% of our business. And then finally, trying to figure out what to buy for fall and holiday with the concerns around a reoccurrence of the virus. So it's really a tricky time right now, and it's putting a lot of pressure on all retail, particularly apparel and accessories.
Yeah, no kidding. I mean, you're looking at Macy's looking at rescue financing. Some reports say that Nordstrom's could be close to bankruptcy. You guys just raised some money. You agreed to a $275 million revolving credit line. You actually drew from your current credit facility as well. Can you just tie all this in for me, especially executive and board comp being cut? How much liquidity do you have for how long? Like, how long does this last you for?
Well, we are fortunate, given our balance sheet and how we're structured, our cash position. We're well over $1.5 billion in available cash with a very strong balance sheet. The add-ons that we have done and some that we are considering is more or less add-ons to existing borrowing bases. So our balance sheet is unsecured at this point. All of our debt. So we have a great deal of flexibility, and I think we have more than enough cash to get us through this crisis. But I think we're in the minority when you really get down to it and start thinking about where other retailers are. And they've had to take assets and pledge them, use them as security, and they've also just been in a situation where having to go out and potentially raise equity at very steep prices right now.
So do you expect, I mean, what do you think plays out in the industry? Like, are we looking at bankruptcies? Are there going to be mergers? Like, is it Chapter 7, Chapter 11? Like, what do you see in the market?
Look, I think retail was going through, especially apparel and accessory retail, was going through a consolidation to begin with. And when I would talk about it, I would talk about a 5 to 6 year trend that we would see, anywhere from 20 to 30% of the stores in the United States closed over a period of time. When you look at the U.S. retail market, we're just overstored compared to every other region in the world. On top of that, now as the online component has become a greater piece of the business, that's putting pressure on it. This virus pandemic has only accelerated that, and I would expect over the next 2 to 3 years we will see store closures. We'll see M&A where weaker retailers with strong real estate will be acquired, and then finally, unfortunately, I think we will see bankruptcies and restructurings as we go forward.
And then you mentioned specifically looking at inventory. So to that point, when you think about reopening stores, how do you think about that? Not from a demand perspective, but how do you protect the workers? Do you structure how many people are going to be coming into the stores? Do you have to renovate the stores? What are you thinking about?
Well, I think there's going to require some investment in stores to protect the workers, screens that we're putting up, plexiglass that we're putting up to protect the workers between themselves and the consumers, especially at the cash wrap. A number of issues around significantly more cleaning that will go on constantly as we go forward. Our stores aren't big box retail stores that, 50 or 60,000 square foot stores. About half of our business is retail, and I'd say our average store is about 8,000 square feet. So give you a typical specialty store that you would see in a high street or in a mall-based retailer. And I think it does require a significant amount of investment there, cleaning, protecting the workers with masks and protective gear. We're actually looking at some protective gear that'll be since we're a fashion retailer, it'll be a little bit more fashionable than just throwing on some kind of hospital gown. So we're working on all those things as we go forward, but in order to protect our employees and to protect the consumers when they're shopping in our stores. It's a brave new world when it comes to all of that.
No kidding. And so I wondered if you could give me some perspective into your margins, because as you said, you're going to have to shell out money to do that for your stores. At the same time, managing inventory, 6-7 months out, I can't imagine how you do that and what you do with the inventory that's kind of left in your stores now and how much you've discounted to get it out the door. Can you give me a feel for how you're looking at it?
Yeah, we're planning internally very conservatively on the margin line. We're anticipating that when stores do reopen, it's not going to be a V-shaped recovery. That's not what we are seeing in Asia. We're seeing a gradual recovery throughout our business in Asia and China. Business week over week keeps getting better, but we're still running overall somewhat negative to where we were this time last year. So it's not like it comes back and takes off. I think the consumer has to get comfortable about going back out again, has to get comfortable about shopping again in that environment. And that takes a little bit of time as that works forward. And I think, as you said, I think there's going to be plenty of inventory. And if you think about the spring-summer season, if you want to call it a 26-week season, we're in the process here in North America of losing anywhere from 8 to 12 weeks of sales on them, and that would be somewhat optimistic, assuming we're going to open up in May, early June, and we've lost 8 to 12 weeks of some of the best selling when you think about the Easter selling season as you're going into Easter, Mother's Day, which clearly we're going to miss a big part of that, and then even as we go into Father's Day, we're going to miss a big part of that as well. So it's going to be a situation where there's plenty of inventory and people are going to be looking to turn that inventory into cash. So we're anticipating that it's going to be very promotional and with significant discounts. But the key is to clean the inventory out and move forward. I think when you look at fiscal 2020, it's really not about earnings. It's about liquidity and cash flow.